Good morning, everyone, and welcome to the European crossover webinar. So it's been relatively quiet overnight. We did see an extended move in the Aussie dollar. Before the ECB meeting, we had got short at 77.29. The market wasn't even moving very much, and I wanted to make sure I had no dollar exposure going into the ECB meeting. So very minimal gains on that. I guess gains are better than losses. But one of the things that I noticed, I was mentioning to some traders, was that while the euro was making that second foray up there to new highs, the Aussie dollar never did take out its highs. So that was kind of giving an indication, although my concern was more with the euro dollar, but it's a good indication as to what was going to happen. I mean, that its upside was limited. Obviously, when the euro came apart, then obviously that pushed us, much lower. Just getting some headlines from Dijsselbloem, but they're not important. They're just Greece. I mean, in the sense that it's not going to move the euro. It's not like as if he's referencing, the meeting that just went by yesterday, and I didn't know how that meeting was going to come out. I mean, obviously when they didn't take action, that should have sent the euro screaming higher, and it moved higher, but it didn't go screaming higher, and then that's why it looked rather suspect when it was up there at those levels. So but as I mentioned, it's been kind of quiet. I had, when I saw the euro, on the first move down, I was able to catch some of that. Well, did pretty good on that. And then on the second move up, you do good too. Although my thinking was, as we were coming back down again, I thought, if it's going to slip, it's really going to slip. And so I really got out of my positions, although they were mainly just scalping, too early. So I will say that was my mistake on there, although I did well scalping, but I should have gone and hung on. My concern was, what if it makes one more run back up? But it really wasn't. I mean, you just had to go, at that point, you had to just play it out. And, at least if nothing else, I should have kept a little bit on. So, and obviously we worked lower. What I was looking for was going to be in the upper 1260s. We did get down there, and even lower. Eventually, we moved down to the 1240. And I was hoping for a decent bounce, but we didn't get a bounce. We got a bounce a little while ago, and I'm looking at 1294 to 61%. Lucas says, which is nice. He says, "Tip my hat for yesterday. You and Blake are amongst the very few people can learn from in this business." Yeah, that's very nice. Yeah, man, Blake's excellent. Yeah, I just try and give my insight on the euro. I follow that so closely. I've always liked that currency because it's so liquid. I like the way it moves. It took me a long time to learn how to trade that, and I do make my mistakes from time to time. There's no doubt about that. But I'm pretty good at reading how an event's going to play out. From the way that the euro, to read the action in the euro and what it should be doing and what's expected and who got popped on the wrong side of the market, stuff like that. So, yeah, and in some ways, I don't even think I'm as aggressive enough as I should be in the euro. But yeah, I mean, the other thing we'll say is I'm pretty good at trading the euro when it comes to events, whether it's FOMC, NFP, or ECB. Although I didn't do great at all on this last NFP. I guess because I wasn't sure what it was going to do, and then I wanted the euro to get up to what was it, 1257 or something like. I mean, 12. I was looking for, I think at the time, 1274, which I think was a 61%, and I think it only made it 1252, and I thought, well, God, at least if it made up to 1257, I'd chase it all the way down. So I didn't know, I didn't have a good feel on what was going to happen on that NFP. I really didn't. And I guess I thought later on, I thought, I guess if I don't have a real good take on how I think something's going to play out, even if I don't know what's going to happen, like yesterday in the ECB, I just had a good feel on, what I thought it should be doing. And when it didn't do what it should be doing, then I thought, well, you got to take the other side. But it's a good market to go and trade. I mean, I don't trade the cross rates like a lot of y'all do, but I do follow the euro pound a lot more closely because of the euro itself and its impact. Obviously, to a certain extent, the cable, which we'll talk about, because I see a double top, and I'm a double top. I see a head and shoulders that's formed in the cable. And we'll take a look at that. Let's see what's on tap for today. And there's really nothing in the U.S. session. If you look here, we did get Swiss employment. Let's see, Germany, trade. These didn't feel the movement at all whatsoever. I've been saying that maybe in a disparaging way, but it's been true. I said, this European data is not going to move the euro. It's just not, Eric says, can you explain a little more about the flows that you were talking about yesterday? Where does the flow start and end? How would it have kept the euro propped up? I don't understand that. Well, yeah, we can go into that. It's really on a longer term basis. But, yeah, because some people were confused. They were thinking the flows like momentum flows. Because someone was telling me, oh, yeah, I know flows. I saw the flows going in the euro. No, I don't mean momentum flows. I meant like flows, like cross-border flows for transactions. But we'll go into that. But they're more in a longer-term picture. And you have to see, are things really changing? So I'll try and explain that a little bit. We do have Canadian employment today. Last month, they had minus 31,000. This month, they're expected to be 15,000. We'll have to see how that goes. I've been talking. I think that the dollar CAD bottomed out. I mean, when we got that move lower and we kept on going lower, further than what I even expected, it was interesting to think what was going to happen after the BOC decision. And when they didn't cut, I thought they should have cut, but most people didn't think they were going to cut. At that point, I didn't know what they were going to do at that point. I knew that most everybody wasn't looking for them to cut at that point. And I made the case that there was a good Bloomberg article with a video explaining how the Canadian and U.S. rates don't, differ that much. I mean, generally, they're in the same line. It's rare that one's cutting and one's raising. And that was the whole take, was they thought that would not happen. And at that point, it looked like they probably weren't going to cut. Although what I've been saying all along was I thought they should cut. And I thought that leading into September, that's when they would cut. They would likely cut. As we came in towards the last couple of days going to that, I'm like, well, it looks like it may not cut after all. Although I thought they could have helped the economy to cut one more cut. But obviously they chose not to. But the thing is that should have at least allowed the CAD just to dip. And we weren't even sure how far I was going to dip. I thought, hey, it might be 50 pips, it might be 75 pips. When they made the announcement, the dollar CAD actually rallied up. And I was saying the market was sold off. And someone was asking yesterday, hey, on this crude news, do you think that the dollar CAD's a good sale, a short? And, I'd mentioned, I talked to some other people in the chat room, I'm like, from a day trade perspective, you might want to take a day trade, but I think this market's sold out. And we've since, tagged on another, 25 or 30 pips since then. We did dip, though. We did dip from that area. We dipped down to, I think it was 2908. There's some good support there, 2908, 2909. And so we did dip from that area about, maybe about 18 pips or something like that. And if that, maybe about 15 pips. And then we did reassert ourselves, and we've rallied up close to 2960, and there was 38%. But I think it is sold out. But I think it'll probably be a long road up. But I think we have bottomed out in the dollar cap. But it sure has traded pretty funny. There's nothing here in the U.S. We do have wholesale inventories at 10 a.m. Eastern, but that's it. So other than the Canadian jobs report coming up, there's nothing. It's just not a whole lot of anything. Let's see. So we're going to move into the charts. Oh, we'll see what's happening. Guess they're winding things down. I think they've blown it. The BOJ, I think they've blown it. There's just, I was talking to someone else. I said, yeah, they actually had got short to 6J, and it was a good trade they had on. They were asking about it and what they should do. They'd already taken off some of their position, and we're up around the 250. I said the 250s, well, that's a key area. I go, you would expect to stall. Actually, I didn't see that on the 2 hour. I had a resistance at 261. That's where they actually stopped. And they did stall there, and they pulled back. They pulled back all the way almost to 197, and then here we are reasserting ourselves at 235. I just think that the BOJ just absolutely, totally blew it. Just totally blew it. I mean, they will actually have to come out with helicopter money in order for this thing to go with any significance higher. Jesper Bergman, head of trading for Nordea Bank in Singapore, said the dollar would probably stay above 100 yen and trade towards 105, 100 yen ahead of the monetary policy decision by the BOJ and the Fed this month. Yeah, that's what I'm saying is I think it's going to have an underlying bid. That's what I was telling that person. Obviously, that 250 was a good area. And I said, you can expect a stall, and that's exactly what happened. And then they got down to 197, apparently in Asia. And we've since come back nicely, but I think they blew it. I think they had the opportunity for dollar yen to get up to 108, as many were expecting. And if the BOJ came through, we could, as I said about a week and a half ago, they could be up at 111, no problem. But they blew it. They absolutely blew it. That infighting, I mean, just a bunch of frickin' idiots over there. I mean, idiots, and it's just like, it's insane. That's why it laughs when some of y'all laugh at the Fed and stuff like that. You see all these other people all these other central banks said are the biggest idiots in the world. I mean, the BOJ right now reminds me of the Keystone Cops. Seriously. I mean, they had, they did things right, being quiet as we went down towards 100. We dipped below 100. I didn't think we'd get any follow through. Then they get a big help at Jackson Hole from Yellen and what's his name, Fisher. And then the next week, as I said, they gave the 1-2 punch. Then Hamada and Sugu get on the wires, and boom, we're blowing and going. Come NFP day, they get up to 432. Don't forget they were sub 100. And then these idiots, frickin' morons, trip over their own feet like the frickin' Keystone Cops and blow it, and here comes the yen back down. They've blown it. It's over for the yen. It's over. Unless you have helicopter money, all you do is you sell into rallies in the BOJ. Unless they do helicopter money, it's over. It's over for the yen. I'm sticking to that same story. They'd have to do helicopter money. At this point, I'm not saying they can't rally, but they'll just sell into it. And they might hang around 105 or whatever, but it'll come right back down the pike. So we already talked about, the yen and the ECB and Eric was asked about flows. I mean, I already explained it yesterday. I mean, I don't know how much more in detail I can go. It's a matter of, you just have to ask yourself, and I guess it's better to pull it up on here. And Friday's kind of a tutorial day anyway, and it's rather slow, so we can do that. Here's the euro on a weekly chart. Here's that move all the way up to 140, but we came down in here, and when Draghi came on with his whatever it takes, and we were able to push and get sub 120. And the market really fell apart in here. You can see, I remember this clearly when it was down in here, and people were talking about a lot of options there at 125, long-term options. As we slid through here, we got down in here to the lower 120s. I remember we got a decent little bounce. And then as we came in here, you didn't know what the market was going to do at this point, but it didn't look good, okay? And once we slipped, wow, the wheels really came off the caboose. And this is more about position in the sense that it's like, wow, it's not holding up 125 well, and it gets past 120, and then everybody gets the hell out of the way. Now, at this point, we've been languishing, because one time we got as low as, if you remember this, that's where it was like in Asia when we dipped all the way to 461. It was pretty nasty at that point. And people think we're going to go a whole lot lower. Now, this is going all the way back to March of 15, okay? And we had the rally back up. And this is on a weekly chart. This is where, the euro's coming, you're thinking, okay, it's going to run out of gas. It's gets short, it gets here. I mean, come on, we're coming into good level. But then this is when the Chinese market was coming unglued, and that trade, which was, selling the euro, buying the Chinese yuan, ended up being unraveled. And because it became unraveled, you saw the market just go crazy, see all the way back up. And then we obviously come back down, finish the week a little bit lower, finish the week even weaker. And we push a little bit lower. The thing is that during this whole period, Draghi and the ECB have done everything they can to push rates down. I mean, they've had some issues. Part of it was also the Germans were totally against it. They didn't want to see any quantitative easing. But, they've done what they could to push this market lower. And as we moved lower, it looked like things were going to finally start to go the way, in the way of the euro. And we're pushing it. It looks like we're going to come into, they're finally going to get some quantitative easing, announced new quantitative easing, which is what we got in December. I told you about that. We got this dip down here. Now, the dip on that day was, I think it was 518. Now, we were lower in the week. But, at that time already, Goldman Sachs was looking at 100. And, then to go down to, actually, they're looking for 98. And then I think the next number was 88, and then 82 by the year 2017. And we saw the euro actually run up. And I told you all about this. We had this big old run up. We got up to 110. I thought we got to 110 and a half, but we got up to right at 110, 109, looks like 109.79. Okay, still a 400 pip move off those lows. And then we kind of languished in here. But during this whole time, Draghi's been doing everything he can to push the euro lower to help out. And you can see it just keeps coming up. I mean, if you look at this from I guess, one way to look at this, it's been on a steady trajectory higher. So it's been on a steady trajectory higher, even though he's done everything he can to go on and push the euro lower. Okay? Now we broke, when we got up here, this is where everybody was saying, oh, we're going to 126, blah, blah. Remember all these bozos that didn't know a damn thing. Okay? And I guess you can look at here, this is a very nice shooting star right here. The wick is a little bit short, but come on, it's a weekly, so come on, so that's close enough where you can see the move that we had. And we saw a very nice pullback in here, and then a very nice strong white bar, only to come right back. So the market was trying to find itself, and we started working lower. And actually, it looked like the euro was finally going to maybe getting down to 105, and I'll be doggone if we're not loading back up and moving right back up the ladder. And once again, people are talking about 118 and the whole works again. But essentially what's happened is, of course, the Germans were against it. The problem is that they've had, and when I say about the flows, is you can't get the money out because when the ECB, through this whole period, has kept on going lower, 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 to the point that they've gone to negative rates. And the reason they obviously, the reason they went there is to try and push the money out of the banking system to get these guys that, once they're in negative rates, they're going to have to push this money out into the economy, because how are they going to make any money? Think of it as you're a bank, and you don't, like I said, you yourself are a bank, and you don't have any other means of income. You're not working another job. This is your only job. You're just a bank. So you have to make money. So now you're being taxed in a sense with negative rates if it's being held with the ECB. So the ECB did everything they could to push this money out, and they're just not able to go and push it out. They try to do additional quantitative easing, but they're limited to what they can because you already have the boons and negative rates, and also I talked about proportionality. They can't load everything up and just buy German boons and that's it. But they've done everything they could, and the chart tells a story because they haven't been able to push the euro down. But the reason is they haven't been able to push the euro down. You saw when in this big move last August with the Chinese yuan, that was the one thing they were able to push out because a lot of people were selling euros and buying yuan. Obviously, when they reversed this trade, that's why the euro went so strong up. Well, they can't get the euro to push down because there's not any activity going on. You see what I'm saying? If you can get activity going on to generate flows, whether it's within the Eurozone or flows coming out of the Eurozone, where there's actually more commerce, coming out. One of the things that Mark Dowd explained to me is that the Eurozone, it's kind of like it's within one of the reasons it couldn't break, because I remember I was having that discussion when we were in the 120s, and I'm like, it has to go lower, it has to go lower, and it was much further back, I think it was. But anyway, I guess it was right in here. And I was like, it has to go lower. He's like, no, it doesn't have to go lower because their flows are within the border. They're not doing anything to bring in flows or like importing a whole bunch of goods where the euro's going out and pushing the euro lower. But like I said, the one thing that you have to look at is they have not been able to generate any economic activity. And if they can't generate any economic activity, then you don't have the money coming out of the banks. And if you don't have the money coming out of the banks, the economic activity should be able to spill over where the consumer And that's where you need to get the inflation. The consumer is purchasing goods, and at the same time, you're getting this flow of the euro moving in and out. And what they're trying to do is put themselves in a situation where it's advantageous to go in at that point where it ends up driving the euro much lower. And then that way it could spark up and generate the activity. Well, it's basically stuck in the mud. Think of it this way. I'm going in a roundabout way, but think of it this way. They juiced up the engine, so they're hoping that it'll get up to about, let's say, 85 miles an hour. But it doesn't do any good because they're in the mud. And no matter how much they've juiced up the engine, the tires are spinning in the mud. And that's why the euro, let's take a look at this. That's why the euro has just been stuck. You see what I'm saying? It's not going anywhere. Their whole drive was to push the euro much lower, okay, as people see, from a valuation standpoint, but because they're stuck in the mud, it's not going anywhere. And it's frustrating because as long as the euro has this high valuation, they're not able to generate this inflation. In a way, like I said to you yesterday, kind of works in reverse and jumping all over the place. But if you get into a situation where a currency is getting wild inflation, it's obviously going to hurt the currency. But in this case, it's working. We're in the early phases, and they need to get some inflation. And they just can't get the inflation. So when you look at it, as I mentioned before, I was talking about the flows. When you look at this, you say, wait a minute, the euro versus the dollar. The Eurozone economy is nowhere as strong as the U.S. Look at the employment picture. They're 10% unemployment, and they just got down to 10% employment. And the U.S. is at 4.9. It's got to go lower, and it doesn't have to go lower because it's a matter of those flows. And I don't mean flows like momentum, but the flows, they can't get the money out of them into lending by going into negative rates and doing it, or even buying like I said, purchasing securities it'll get them to go and lend money out. And if they're not willing to go and do that, or they don't see the economic activity to justify that, then you can't get the money out into the public. It's kind of like what the U.S. did with the cash for clunkers. And the government was giving away money. Actually, you buy a car, they give you the money. Anything to stimulate the economy. And it actually ended up helping. It got things clipping along. And so, but they're not able to go and do that. And so those banks just don't want to lend. Another thing is some of them can't lend. They've got themselves in such a bad way that they didn't rip the Band-Aid when they should have written off all the bad loans in 2012, like the U.S. banks were forced to do. So that's why if you're looking at it as an apples to apples, saying the U.S. economy is so much stronger, the Eurozone economy is so weak, no, this makes no sense. This should be down at 107, whatever. It should, but you can't look at it that way because it's a little bit more complicated than that. So, like I said, you have to look at it in many other ways. And that's why when you look at it, the expectations yesterday was if he couldn't do anything, then that just pushes the euro or keeps it up in here. And when it did rally up in here, I thought, okay, from a short-term basis, it's a good short on a very ultra short-term basis. But it's going to have a hard time. The only way that we're going to be able to push the euro up with a little bit more downside is once we get past the FOMC, then people start to say, well, in all likelihood, they're going to raise in December. And then maybe we can start to get the euro working a little bit in that direction. And as the economy gets a little bit better, maybe that'll also help push it. But I tell you what, it's been in this zone here, this 110 to 114 for, it seems like forever and a day. And it just doesn't want to break out of it. And we're going to have to see some major catalysts to break us out of that range. It's already time for a break. I was already well overdone, but give me one moment. And we'll come back. And I don't think there's any real... real news coming across the board. So what I'm going to do is I'm going to purposely leave it on the charts because I believe that we have a nice head and shoulders here in the cable. And I'll do this real quick and we can focus on this. See, that's going to target 3120. Well, basically, I guess 3125. Okay, everybody, welcome back. And as I mentioned, we're looking at the cable with a potential head and shoulders. I also want to note here that on the gold market, we have come down to this 3750 area. The 3770 is the 38% of 38% of the move from 0550 to 5760. So I would expect to see some type of support right in this area here. Here on the gold market, we've had this real quick yank down. I would look for them to go on and be somewhat supportive. And actually, there's even a lower move here down to 1334, which I think would be probably a pretty good little buy zone. We've dipped right now to 3740, but this area. Let's take a look here. Should provide some nice support in here. Right in here on the gold market. Just going to try and share that with you. Yeah, Susan's asked where's the gold chart. I'm coming to that. Hang on. Be just a moment. Now we can dip as low as 34. Here's a gold chart right in here. You can see 3770 is the 38%. I'll go in and open this up a little bit here. You can see here on NFP day, we'd come all the way down to 34. It's just 3410. I've come all the way down, actually rallied all the way up to 3410 before retracing back here. You see? So this is going to provide a very key support area. Here's 3410, but you can see here at 3750 we've got this ridge here, and 3770 is the 38% of the move of 05 to 5760. And we'll go and pull this up real quick. You see right there. So we should see some pretty decent, actually, it's actually, okay, 07. Hang on one moment. There we go. There we go, right there, 3770. So we've had a pretty good sell-off after a good run here in the gold market. And you can see here that on my exponential moving averages, we crossed over into a sell signal here, and we've been in a sell signal, and you can see the rally back up, ran out of gas right before this level here, the 4420, and also came in where it was touching here on the slower exponential moving average. But you can see that the faster exponential moving average never crossed over, so it still remains in the sell signal. So you'd still continue to play that. But we have come into a little bit of an extreme. I think 34 is a very good area. But this area, we should see a little bit of a balance, because what I'm saying is, okay, we came here, down here, just sub 39, and had a rally back up to 44. So we came, again, it looked like, okay, they've taken it out, so that should help stop some people. And we just kind of languished in here, in this area here, So now they've taken out again the low here, but we've come into a very nice support and a nice fit. So I would look for us to see some additional short covering right now. And that may take us up back here towards this 39.80, maybe just before. So you might be able to grab yourself almost $2 or whatever. I'm just saying we're coming to some key support. It doesn't mean, you know, we've had such a good sell-off. If we may not get to 34 till next week, but that's going to be a very good area right here because was the previous high, and we fell all the way back just sub 20, like at 19 and change. So you're going to see a lot of good support here. I mean, anyone that's got short is going to be covering the shorts big time around 34. But I think you can go and see a bounce here. They'll take us up here. We may get up around, I mean, you can probably catch a quick dollar, maybe about $1.50, and then the market might struggle a little bit. It'll probably still work a little bit higher, but I'm just saying we're quite oversold. If you were short, it wouldn't be a bad idea to go in and cover part of your position, and we'll see maybe a little bit of a bounce up here because they've sold off pretty good, and yesterday was pretty scary, and then we've added on to it, so I think we're probably a little bit overdone here at this point. But I just want to go and point that out. I'm going to point it out after the fact. So I think if you're short, I think that's a good area. Obviously, the system's still saying stay short until things change. So the momentum is still going in that direction, but we've had a pretty nice dip right in here. Let me go in and flip back into the charts. Susan says, do you still think goes to 1280 and 1250 at some point? Well, you know, like on my blog that I pointed out, you know, I was recommending selling gold when we were in the 1360s and 1340s, and we got down there. But the whole thing was, and I said that before, and I've mentioned it here, is, okay, let's take a look at gold on a little bit bigger basis. Hang on. Let me go back here into the... And I've been very clear about this. Hang on one second. Okay, when I was looking here, I was saying, hey, look, I think we've got a double top in here, okay? And that's why I was calling for a move lower, which was from here. I was telling people, hey, sell it in the 60s, anywhere in here. And we're in the 40s, and I posted the blog post. We were at, I think we're trading 44, 45 when I put that blog post. Now, we got the move lower, but the whole idea of us to move lower and break sub 13, which I thought was a good possibility, we could break 13, was predicated on a good NFP. I didn't think it was going to be a great NFP, but my take was that we would come in around the two teens, like 215, something like that. So if you got that move into the two teens, and let's just say, I'm just saying, it didn't have to be great. Let's say it was 210, and you had wage growth of 0.2. Not great, I'm just saying, just all right. That still left the possibility that they could raise this month. And that was going to kick gold sub 13. Remember, I even told Blake, I go, hey, look, if we get a good number, let's say 230, whatever, I go, we can easily print a 1290, maybe even 1289, okay? But the number came in at 151. Okay, still not a bad number. It wasn't a great number. It's not a bad. But when the wage gain came in at 0.1, that took the Fed off the table. Took the Fed any raise off the table. So it gave gold a reprieve. And if you go back to the blog post that I posted on gold, I had said, I go, hey, look, I think we're going to go here. Eventually we can go to 1280. Eventually even get down to 1250, which would be the 38%. And I go, Even if you're bullish, you will need to get a move down to 1305 to refresh. If you're bullish, you need to get at least a move down to 1305 to refresh. And at the time when I hit the blog post, posted blog post, we were trading it in the 40s to mid to upper 40s. Okay? Where did we go? We got to 1305. You see what I'm saying? So not only did we work off any kind of a rot, but the gold got a get out of jail card when the wage gains came in. I mean, the employment came in at 151, but the wage gains came in at 0.1. That's why we saw this screaming rally back, because the Fed isn't going to go in and raise. That's why they went in that direction. So right now, like I said, they're off the they basically got to get out of jail card. They don't have to worry about it. That being said, we had this rally back. The reason the gold fell back here is because the euro ran out of gas yesterday, and it looks like now the euro be sliding, the dollar is going to gain a little bit of strength. So we were very oversold. I mean, I'm saying we were very overbought. We came in down here, and we've got some additional support here at this 36.40. So it's just a matter of the gold is trying to find a little bit of a balance, and then we'll probably get a little bit of a rally back. Probably by next week, I do believe, unless we get it today, it could go on a scare, but we can get down to about the 1334, and I think that's going to be a very nice area to go in and buy for a bounce back. And then you have to let the market see what it wants to do. The whole idea is the euro has pulled back, but there's still going to be an underlying offer tone to the dollar, I believe, until we get past FOMC. So that's what I'm saying. I'm not looking for the euro to totally, from a technical standpoint, it's bad that it wasn't able to break higher. But I wouldn't think that the euro is going to go on and completely fall apart. Try to move this back. I think the dollar will gain, but we're not going to get the dollar to really gain until we get past the FOMC. Once we get that, then everything should be reasonably okay. Let me go on and take a look. Let's see what else is on tap. Obviously, the Swiss is moving higher, which is coming into this key level 97.45. And if you remember yesterday when I was on with Blake, I talked about the Swissy putting in a hammer bottom on the 15-minute chart, while the euro had gone up to 13.29 or 27 and was already backing off. And that's why I thought we're going to get a little bit of a run in here. And that came out to fruition. We're rallying back. We'll go and take a look at what we're looking at as far as a fib. And I'm keeping it on a short-term basis. Not back to this fib, but on a short-term basis because of the move that we had yesterday. And you can see here we had a little bit of trouble here at the 38%, and we're moving higher. So you can probably find a little bit of a resistance here at this 97.64, but the next bigger target, since they had a pushback at 38, is probably going to be this area right here, 97.95, which would be the 61%. So we can see next week the euro, as I said, from a technical standpoint, continue to weaken further, and we'll probably eventually get down here to this 12.16. But once again, I don't think the wheels are going to completely fall off the caboose. I do like the short side of the euro. I want to get a little bit more of a rally, but we'll see how it plays. There are some big option plays later on today in the euro. If you saw Forex Live, they were posting that information if you're interested in what that was. And as far as the dollar CAD goes here, we've got the Canadian employment jobs report today, and take a look here on the dollar CAD. We've already got past the 38%. Let's take a look where we're at right now as far as the next key fib. Blake's going to be coming on in just a few minutes. Once again, I'm just looking at the most recent move. We've got some, we're going to have to see how the employment comes, because if the employment comes in weaker, obviously you're going to push the dollar CAD, higher. To me, there's going to be some trouble in here, but obviously if the report comes in weaker, it's going to push $1 CAD. But my whole take was, and I talked to some people, in the chat room before, someone was asking me yesterday about the dollar CAD. Do you think it's a short when we were here because of the news that was pushing the oil market? And I was saying that, yeah, from a day trade, if you want to do it as a day trade, you could take a short. We've rallied ways. I go, but the market's sold out. I really believe. And as I was saying, when we didn't get the rate cut with the BOC, you would have thought that we would have gotten even further pullback. Maybe not a whole lot because the market was pretty oversold, but we've gotten a pullback. And instead, the market went and shot up. And we came back to find the support in here. But you can see since then, we've just been working higher. And I just believe that the market's sold out. I don't think it's going to turn around and go gangbusters, but I think it is sold out. We'll get past the employment report today, but I just think that the market, although it's been acting pretty crazy, I think it should have been much higher, but we have pulled back. I just think that we're quite sold out here. And you did get a double bottom in here, and we've reacted very nicely. We've got a very nice pullback. So I think it's somewhat sold out in here. But getting back to the gold market, this is a good, decent area right now. We may go and get a little bit of bounce. I think you're going to see a lot more buying around 34. We may not see the 34 till next week unless they're going to really try and push it and see if they can put a lot of people under a lot of trouble today. But we'll see how that plays out. Blake should be coming on any moment.